Okay, so let's finish up the last two sections here. So again, a small section of this is going to be basic accounting, which is 10% of the exam, which is going to be consisting of 5 questions. These are basic accounting. So if you guys remember in chapter 1, we had that small section where it kind of introduced to you some basic accounting 101, okay? But in this case, I kind of went into it a little more deeper and found out that there's other places. So again, the first section we're going to look at is chapter 6, reports, which is going to be what basic financial statements are and have basic understanding of each one. So what are the 3 financial statements that you are required to know?
One is the profit and loss.
Profit and loss.
Assets equal.
What report does that? There's an actual name to that report.
The balance sheet.
Balance sheet, good. So Magdi, that is where you're referring to your assets equal your liabilities plus equity. Okay. What else? What's the last financial statement that you are required to know?
Trial balance.
Not the trial balance.
Your journal.
Not the journal.
Cash flow.
Statement of cash flows, right?
Cash flows, yes.
Okay. So once again, if you go to your reports, right, you can find all of those exact 3 by going to your reports, clicking, I believe it's under company and financials. Where are you? Company and financials. You got your profit and loss. You got your balance sheet, and you have your statement of cash flows, which again is very short. But in this case, right, these are the typical 3 financial statements that you do need to be able to know because these are the very most important ones as an accountant, right? You need to know where your company is standing, right? And especially your balance sheet, right? That tells you your net worth as well because the equation is your assets equal liabilities plus equity, right? That is your standing. Like what's your net what's your net worth in the company? And of course, statement of cash flows tells you exactly how much money is actually flowing into your company and how much money is flowing out from your company. Okay? So those are the top 3. Make sure you understand why it's important to run each one. Now, in regards to the different categories like profit and loss by job or profit and loss by item or things like that, that's not very necessary. You just need to know the overall standard statements for these ones. So again, the basic one, which is the profit and loss standard, summary, or detailed, whichever one that is available. And again, also same thing with the balance sheet, the standard balance sheet, and of course the statement of cash flows, there's only one. Okay. So make sure you know the ins and outs of those 3, and these 3 are the most important ones, okay? Everything other than that is whatever, okay? Understand the difference between the cash and accrual reports. So what's the difference between a cash basis report versus an accrual basis report?
On the cash, you record the transaction when you receive payment.
Okay, elaborate that a little more.
You regard it as occurring at the time you receive a payment from a customer or pay a bill from a vendor.
Pay a bill from a vendor is an accrual type of basis.
Okay, so the book says cash basis accounting recognizes income or expenses only when cash is received or paid.
Exactly. So income and expenses are recorded when cash is paid or received. So in this case, if you're looking at paying a bill is already, considered an accrual type of basis because you're owing money. In this case, no. When you're recognizing expense, you pay at time of service. The customers pay at time of sale. That's when you record those income and expenses. We're an accrual basis, right? Right? You recognize income and expenses when the event has occurred. Okay? Regardless whether you received payment or not. Okay, regardless whether you received payment. Okay, so this is looking at accounts receivable and accounts payable. Okay, so in an aspect, right, to tell the true difference between these two reports is how much cash are you actually receiving and how much cash are you actually spending versus how much did you actually earn without collecting the money, and how much money did you spend without spending the money. I don't know if that makes any sense. Or how much debt do you owe? In this case, no, we're not talking about invisible money. We're talking about actual money. So in another sense, in this case, an accrual basis looks at kind of like invisible money where customers owe you. But if customers owe you money, are you guaranteed that cash? Not necessarily, because they can, a customer can refuse to pay you. And same thing as you on the other end, right? You could refuse to pay a vendor. Okay? So the idea here is the true difference is looking at real money versus invisible money. Okay? So making sure that you understand what the difference is and why it's important to use it for reports. Okay? Especially for your profit and loss. Okay? Chapter 14, adjustments. How and why to set a closing date. What's so important about setting a closing date? Let's talk about the what or the why, I guess, and then the how. Why do you need to establish or set a closing date?
The closing date, meaning the monthly, end of the month balancing or end of the year balancing, that closing date?
Yes, but what does it physically, why do you need to do that? Why do you need to close your books at the end of an accounting period? Or in this case, right, accounting and QuickBooks, this is where the terminology kind of differs here. Yes, you would typically close out your books at the end of the year, but in this case, right, what is the purpose of setting a closing date? Okay.
To lock your transactions.
To lock your transactions. So again, Kim, so here you go, Kim. You said to close out transactions for a given accounting period, whether it's monthly or yearly. But ultimately, the end result of closing a closing date will lock your transactions. Okay, so lock up your files, right? Set a password for it so then no one can go enter in those transactions and create fraudulent charges. Okay, now how do you lock your data? How do you set a closing date? How do you set a closing date?
You go to preferences on your edit menu and then go to the accounting part of it. And it should be
Good.
under preferences.
Good, right? You go to
Yeah,
edit.
that was good.
You go to
I
edit
was looking for that
preferences.
one.
So you go to edit preferences, accounting, right? And you go to company, and to set the closing date is down below. Okay. Now, what's the second way that you can get to this window? There's one more way that you can get to this window. Okay. What's the second way we can get to the closing date? Right? If you go to company, you can set the closing date.
It's right there, yeah, set closing date.
And then it will take you to that exact same window. Okay? So let's go ahead and put that in there. How? You can go to company menu. Set closing date. Or you can go to edit preferences, company. Wait, set preferences, accounting. Company closing date at the bottom. Okay. Now, okay, once you get to that window, you're going to literally select a date and create a password to lock the data file. Now, here's something that you also need to know. Who can be able to lock the data file? Only admin can lock the data file. Okay? Only the admin has the rights to be able to set a closing date. Okay? How to create a general journal entry if if asked to do so. Okay? Okay. Let's talk about in the first place, why would you create a general journal entry?
Can you repeat that again?
Why would you create a general journal entry?
To make an adjustment.
Yes, to do adjustments, right? To recategorize transactions, right? If you accidentally mistaken something and put it into another section, you can fix that by recategorizing it. Okay. You can also do non-cash transactions, right? Which is also known as your depreciation or bad debt. Okay. You can use it for adjustments. Okay. Now, how do we actually create a general journal entry? How do you create a general journal entry? There's only one way. If you don't have the accountant's version, you only have one way to do it.
Do you go to the company menu and then choose make general journal entries?
That is correct, right? You're going to go to company. I'll have to exit out of this real quick. Okay. You go to company and you have make general journal entries, right? Once you get to this window, what is the rule that QuickBooks recommends you to create prior to creating general journal entries? All right. What do I mean by this? Well, if I create a general journal entry, right, how do I be able to go back and view those general journal entries?
By putting in the date.
Okay, yes, you can do that, but if I were to save and close, right, how would I be able to locate my general journal entry?
In the general journal?
You can do it that way too, but what if I close out that window and I can't get back to it? How do I be able to find my transactions? Because if I'm going to sit there and press previous for the longest time, right, will I ever be actually finding that transaction? See, I can go back, back, and back, and back, but how far do I have to go to be able to access this? Where can I be able to see it all in one sitting? All the journal transactions I've created.
In the report?
No, there's no report for that.
In your list?
List of what?
General journal entries?
Is there a list for general journal entries?
There's an account in the chart of accounts. You're supposed to have that.
Okay, so that's what I was talking about. You, in this case, when you set up QuickBooks, you don't automatically have that. You have to create that in order to be able to view that. Because if you don't, it's going to be all the way at the bottom of your chart of accounts under non-posting transactions. Okay, so in this case, they recommend to create a bank account called journal entries to keep track of your journals. Okay? All right? So in this case, it's not preset, it's not already there, it's not automatically there for you. You have to create it in order for you to keep track of it. Okay? So that's what they recommend you to have.
Okay, so they recommend you to have a second bank account and call it journal entries?
Yes.
Okay.
Okay. That's so then you can keep track of all of your journal entries and be able to modify them at any given time. It'd be easier to locate. That's all that this is talking about. Okay. All right. Then, of course, chapter 1, how do debits and credits work? Okay, so this is going in regards to the accounting model.
So a debit is a credit and a credit is a debit?
You have to elaborate more than that.
They have to balance.
Balance. How more so? So in journals, yes, they must balance. So I guess you could put that under here too, under general journals, right? Rule when journalizing is your debits, okay, debits must equal your credits. Okay. Now, in this context, is asking you, well, how does the debit and credit system work? And in context per account, right? Per account type. In this case, right? If I give an example, okay, debit or for, let's say, for my checking account, how do I increase my checking account?
By depositing money?
Okay, by depositing money, but in terms of accounting, what am I essentially, am I debiting or crediting my account?
You are debiting. It's an asset.
Correct. So I'm going to put here, right here, accounting model, right? Where assets, right? And I say I have a checking account, right? In QuickBooks, in QuickBooks, I would deposit money to increase my checking account, right? In accounting, we would debit the checking account to increase. Okay, so this is the accounting model, right?
Okay.
Typically, right, a liability. So liabilities, equity, and income, right? To increase, you would, or in this case, increase is you would use credit. To decrease, use, oops, not what I just put there. Use debit for assets and expenses, right? You would use debit to increase and use credits to decrease. Okay, so that's the accounting model there. I have an accounting model on the PowerPoint in chapter 1. All right. And the accounting equation, what is it?
Assets equal liability plus equity.
Assets equals liabilities plus equity. Okay. Now, in this case, I would even recommend you to explore what are the 5 account types, because if you don't understand what account types are, then everything that you learn in accounting would not make any sense at all. Okay, so make sure that you understand what the 5 account types are, which is your assets, right? Which is everything you own. Okay, your liabilities is going to be everything that you owe. Okay, your equity can be translated as your net worth of company. Okay, your income is
That's your revenue, right?
your revenues, but we understand revenues as generating income.
Okay.
Okay, and your expenses are going to be any costs it takes to run your business. Okay, so if I have to spend money to pay for advertising, that's an expense. Okay, if I have to buy inventory, you can understand that you're either under perpetual or periodic, right? If you have to make an expense for it or to get rid of the items in inventory, you would use the cost of goods sold, which is an expense account. Right? Anything like you have to pay rent, any cost it takes to run your business is going to be an expense. Okay? Make sure you know these right here, because that will be crucial to understanding the accounting equation and how debits and credits work. Okay? Yay! So we're almost done here. So again, customization for shortcuts and to save time. So this is 12% of the exam, which is going to be another approximately 6 questions. So in this case, right, we're talking about chapter 14, which is adjustments, okay? How and why to memorize transactions. Okay, so that's different than memorizing reports, right? In this case, what is the purpose of memorizing transactions? Let's talk about why, and then we'll talk about how. Okay? Why do you need to memorize transactions? This answer is pretty straightforward.
To save time.
To save time, right? To save time on entering reoccurring transactions. So for example, right? If you have a reoccurring bill, the same bill, so a rent, okay, I guess a bill, and it'd be rent, right? If you're getting the same bill every single month, that's rent for this month, rent for the next month, rent for this month, at the same exact amount and the same exact company, you could save time by memorizing this transaction. And pretty much every time you have the next month coming around, you would go ahead and just enter in the memorized transaction, and it'll be able to produce the bill for you automatically, right? If you remember, I taught you this on Tuesday, right? What happens when we memorized a transaction? It's literally to help you save time. Now, how do you memorize a transaction? How do you memorize a transaction?
When you create a build, it gives you the option there, correct?
Where do you find this option?
On the bill.
It's on the top.
There you go. At the top. Okay, that's what I was looking for. At top of the window, it will give you option to memorize. Okay. So if I memorize a transaction, where can I find that? Where can I locate my memorized transactions?
On your toolbar?
Not necessarily the toolbar. My question is, if I memorized a transaction, say I memorized a bill, I memorized an invoice, and I memorized another bill, okay? Where can I find those memorized transactions?
On the list menu.
On the list menu, yes, list menu, and you'll have a tab for memorized transactions. Okay, and then you'll be able to, recreate your bill, invoice, or whatever you'd like. Okay, so you go to list, and you're gonna go ahead and click memorize transactions right here. Oh, memorize transactions. You get this window here where it gives you a list of all the items that you memorized, transactions you memorized. You double click on it and save the bill, save the invoice, save whatever it is that you want to create. Now, in this case, what's the rule here? What can you not memorize? There are 3 things you can't memorize, and what are they?
Payments, checks.
Payments, right? Bill payments. What else? In this case, you can't memorize received payments from customers. Okay. In regards to checks, yes, you can. Right? If it's a check that you write every single month, yes, you can create that. The only specific one that you can't write is a paycheck, or you can't memorize a paycheck. Okay. All right, how to set the multiple users and what levels of access can be created. Okay, first let's talk about users. So in this case, how do you set up a user?
In your employee section?
Are users the same thing as your employees? Users is in regards to who has access to the company file.
So you have to do it through company?
Company, right? Company. You go to company menu. Oh, that's accounting. Company menu and set up users and passwords. Set up users and passwords, okay? And then you have the option to set up users. Okay. So again, company menu. Set up users and passwords, which then you'll get to actually set up users, okay? Now again, who has access to be able to create users and passwords?
Administration.
Only, only admin. Now, once you go through the book, right, it gives you a step-to-step on how to create that. Again, that's chapter 12. All right, so in regards to that, you can create as many users for your company file. And each user you can restrict on certain access to transactions and restrict okay, well, actually not, and give permission to edit or delete transactions. Okay. So again, go through your book for that. That was the very last thing in chapter 12 that I did teach you guys, okay? Last but not least, chapter 7. We got 2 more things here. So how and why to create custom fields. Okay, so let's talk about the why. Why is it so important to create custom fields? So why is it important to create custom fields?
To have more information about your customers.
Perfect. To
Is that like a sub account?
not a sub account. But okay, let me go ahead and do this, and then we'll elaborate that. So why to enter any additional information about a particular person. Doesn't have to be a customer itself. It could be a person, right? You have that for vendors, customers, and employees. Okay. Now here's one that the book doesn't really tell you that you can do, but yes, you can create custom fields for accounts, okay, or items. Now, in this case, your book does not tell you directly what you can do, but when we look at the chart of accounts, right, why is it that the chart of accounts is broken up into even more minor sub accounts or minor sub items, right? That's because QuickBooks allows you to create those extra settings there. Now in this case, right, but you are limited on how many customizations that you can get. So in this case, right, my assets, I'm only limited to 5 customizable subtypes. Okay, so in this case, right, my assets, right, I have a bank account, I have other current assets, I have fixed assets, and I have just other assets, right? In that case, yes, you can customize those. They don't need to necessarily say fixed asset, okay? You can even just type it in as equipment, but again, they don't teach you in this book, but you can do it. And the rule here is that you can only have up to 5 customizable subtypes, okay? So in this case, it's not for accounts or items for limit code. Create custom fields for sub accounts. Okay, so in this case, subtypes. Okay, so don't confuse this with an actual sub account. These are subtypes. Okay. All right. So how can I create custom fields?
In your chart of accounts?
Not in the chart of accounts.
Would that be a preference?
It's not a preference.
I give up.
Okay. So this was done in example in chapter 7, but I also did an example in chapter 4 when I was setting up my vendor. Okay. So you have to go to a person's profile, okay? Whether it's a customer, vendor, or employee, right? You would have to edit their information and go to a tab called additional information. And right here, you'll have the section right here for custom fields. And in order to create the custom fields, you need to go down below and click on define fields, all right? Once you click define fields, here's the list, and you can only have up to 15 of them. And the rule here is that each person can only have up to 7 custom fields. But you have 15 available, right? That means you must choose 7 out of the 15 available on this list. You cannot go 7 for this employee, 7 for this customer, 7 for this vendor, and they're all different. No, in this case, you can double dip or triple dip in this case because you can use one custom field for all 3 people in your company. Okay. Oh, okay. I have to click up here. Okay. So let's go ahead and type that in there. So how? Okay. You must go to a person's profile. Okay. Edit. Okay, and then you're going to go to additional info, custom fields, define fields. Okay, rule is you can only create a total of 15 custom fields, and each person can have a total of 7 fields, and you have a total of 5 fields for items. Okay. So that's what you must need to know. Out of the 15, you can only choose 7 per person. Okay, but that's not all. And then when you're looking at custom fields for items, you don't create them in the same window as that one. Okay, it's actually completely separate differently. But you would have to do that through your chart of accounts or through your items list, right? When you set up your new item, you need to create the either subtype or whatever. Okay, so that's it. Okay. Last but not least, you have how to customize templates, invoices, sales receipts, purchase orders, and statements. So, how to let's talk about the why. Why would you need to customize templates? And then we'll talk about how.
To save time.
No. It's not necessarily to save time. Why would you need to customize a template?
Because it saves you time when you perform a task. Like if you need a specific invoice, you can customize that.
Okay, well that's okay. That's okay. You can apply that, but the purpose. What's the purpose of customizing a template? Why would you do it in the first place? When Intuit already provides you a standardized template.
Because whatever they standardize provide you might not work for your business. Most of these tasks that QuickBooks has is to save you time and things make things
Right,
really
but what?
easier.
But why? But if I'm customizing a template, right? Why would it matter if I'm issuing an invoice to a person? Why would it be so important to customize it? If okay, an invoice, right? It should have all the details such as the account balance that you owe and what the items that you sold to the person with their according address and everything. So in this case,
Yeah, but you can add your logo or modify the color or font of your business name.
exactly. So in this case, you customize a template to tailor it to your business. It's not more so to save time. It's to tailor it to your business to make yourself recognizable, to give yourself a name out there, to market yourself. So yes, so in this case, you're looking at into a standpoint where you're just trying to get the invoices done and sent out to people. In this case, why is it so important that you do that? In this case, the template, right, is what's important to your company, because if you send a random invoice that doesn't have your company logo, right, people would look at it and be like, okay, that's just a standard company. But if you customize it to a point where you make it unique, you make it visible, you put your company logo, when someone opens it, they're going to be like, wow, this is a proper invoice from a proper company, right? So in this case, the real reason why you would customize customize a template is to tailor the templates to your company, right? To make it unique, right? And to stand out to your customers / vendors, right? So then they know this company is you, right? Because you change the colors of it, you put your company logo, you make the wording of your company in really big letters. It pops out to you, and that's what's important about customizing a template. But because in my case, right, if I'm just like, I don't really care, I'm just gonna go ahead and send my customer a plain invoice. They open it, they're just gonna be like, what company is this from? You know, if you have a company logo, a lot of people are visual, right? If they have a company logo that stands out, they'll be like, bam, okay, so I know it's from this company. Where if you send a random plain invoice that has no logo, has no anything, it's just standard black and white, they would have to read it and be like, oh, who's this company again? So that's the real reason why you would customize a template. And okay, I'll give it to you that point too, where yes, it does help you save time, but at the end of the day, creating a template or recreating a template or customizing a template doesn't necessarily mean you're saving time, because QuickBooks already has a standard template that you can use. So it's not really in respective of saving you any time, because you're still creating the same sales receipt, you're still creating the same invoice, you're still creating the same purchase order. So at the end of the day, the only difference here is that the very top of the window, you just have to toggle which one is yours. So is that really saving you any time? In perspective, not really. It's just more so to customize it to your company, to make it unique. So then when you send out to your customers, they recognize this is your company. Okay? Now, how do I customize these templates?
You go to the list and templates.
Correct. You go to list on the menu. And then you click on templates. Okay, so good. So in this case, when you do go to list and you do click on templates, right, there are a few things that you can do, right? If you want to start completely from scratch, you can have the option to just go to templates and click new, right? And then you're going to get what's called a template designer, which allows you to create the template, or sorry, to create the form that you want to do with the correct sizing, with the correct way that you want to envision it. Now again, they do recommend you not to do that, just because you're more likely to make mistakes and forget to add a column when you release it out to your customers. So they do recommend you to at least make a copy of a pre-existing company, so then that way you have all the information there available, and then you can go ahead and just add your company logo and change it that way. But that's just the recommendation there. It's not required you to do it. You can create your whole entire template from scratch, okay, by using the template designer. Okay, so I'll go ahead and put that in there. Okay, how you go through there, and I'm going to go ahead and say, whoa, hold on. You would go ahead and go to templates. You can create a new template for using template designer, okay? Or they recommend to use a an existing template and modify it to reduce on missing information on a form. Okay, so that's what they recommend. Now, what can and can you not have in regards to this section here? What template can you create and what templates can you not create for? Okay, so there are exceptions. You can only create certain amounts. There's things that you cannot create, and that is you cannot create a bill or a check. Okay, that's just a little FYI for you there. Okay, and that is it. Okay, any questions in regards to the certification test prep questions. Okay, so here I gave you a pretty much guidance of the entire book and in regards to what do you actually need to know for this exam. Now, do not stop here because I didn't fill out every single question, right? I kind of left some of them blank and explained it to you. So in regards to this is your study guide for the certification test prep itself. Again, I will also be providing the practice exams as well. I do encourage you to go onto the Google Classroom. I did post 3 practice test exams on there with their answers, so you're able to also test yourself that way too. But again, this is just the bare minimum of what the book requires you to know, or I'm sorry, what the certification requires you to know. But like I've mentioned before, exhaust every means into getting to answer the questions in multiple ways. Okay, and make sure you exhaust every single way to navigate each transaction. Okay, any questions in regards to this?
No, not from me.